Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is March the 10th. What a week, huh? We went into the last trading week with a strategy. We discussed it last week with members on the week ahead commentary. And that strategy was to respect the fact that the markets were under pressure, to buy positions that were at good risk-reward entry points, and to sell them into known resistance levels. And that's exactly what we did. We stayed very conservative. However, that conservative approach paid off last week. Let's begin with the first trade that we took off the table, LABU, the Contrarian Biotech Bull ETF. We bought it here on this bullish key reversal. We sold it into resistance. Another one, the banks. We bought it here on March the 2nd on this bullish key reversal off of the lower band of support. The shares subsequently rallied. We sold it into resistance. Now, we are long once again of the banks. We're using a regional ETF. Members will talk more about that on the week ahead commentary. The other position that we took off the table was EDC, the Emerging Markets Bull ETF. We bought it here on the 2nd on a bullish key reversal off of support. We sold it here into resistance. So net on the week, we had a very strong week. Our core positions did well, some more so than others, and we began adding more positions on Thursday. So let's segue into the 10 stocks with high probability setups as we move into the new trading week. And if I have enough time, I've actually committed to trying to keep these videos shorter. If we have enough time, we'll go over the two charts that I believe that everyone must pay attention to in order to understand if this bull market is going to resume or was last week a flash in the pan week. So more to come. Stick around to the end of the video. The first chart up that's a high probability setup is ATVI. We're going to go over the weekly charts here. Members will drill down to the daily and intraday charts on the week ahead commentary coming out on Sunday. Weekly chart, we've spoken about ATVI many times. Why do we like it? We broke out last week above resistance at 74.94. RSI rising, Stokes rising. Volume very strong last week. Do you go jumping in with both feet on Monday? No. Members will talk more about a strategy for building a position in ATVI on the week ahead commentary coming out tomorrow. The next chart up, ST, Sonesta Technologies Holdings. A very interesting trade. Why do we like it? We have a breakout last week above the upper band of resistance on a weekly chart within this triangle formation. In short, we are at the tip of the spear. Why else do we like it? Double bottom setup on RSI. No breakout yet, but we're watching for a follow-through. Volume was a bit weak last week. We have a breakout on Ultimate Oscillator. Stokes are attempting to hook up. They are above the 50 level. Looking good. Members, more to come tomorrow on ST. We're going to do a deep dive on all of these charts. The next chart up, QDEL. Similar to ST, however, better. We broke out last week above resistance. We have Stokes, higher lows, hooking up, a double bottom setup on RSI. And this is why I actually said it looks better, because ST, we didn't have a breakout above the pivot point on RSI. However, on QDEL, we do. We have a breakout of this W formation on RSI. Bullish stuff. Volume also was stronger than ST on QDEL. Well above average. We have institutional accumulation here. Again, do you go jumping in on both feet based upon my commentary and observations right now? No way. That's not the discipline. The next chart up, Las Vegas Sands, LVS. Everybody knows this stock. Weekly chart. We broke out last week. Stokes are attempting to hook up. Double bottom setup with no breakout yet on RSI. This is why we like it. Will we definitely be in on Monday? Not necessarily. There will be certain criteria for all of these stocks that must be met to make it on to our portfolio. So weekly chart, a double bottom setup, no breakout, Stokes attempting to hook up, good stuff. We broke out on price. A beautiful bullish key reversal off of the lower band of support. That's exactly what you want to see. Now the question becomes, when do you enter and when do you add more, right? We know that there's resistance above at 79.84. We'll definitely want to be looking to add more on a breakout above that level, but how do we build our position prior to getting to that resistance level? Members, more to come on that topic. HCA, this is a sector that is going to be and has been in fuego. You had deals being announced last week. We had a bullish key reversal last week off the lower band of support. You had a follow-through breakout from the prior week. We're going higher. We have resistance above at 106.47, looking really good. Stokes rising, RSI rising, volume a bit light, right? So all is not 100% here on the weekly chart, but it is looking good for a continuation move higher in the coming week. PHO, the PowerShares Water Resources portfolio. I think water is one of the most undervalued commodities that there is. And my friends in Central and Southern California can attest to that. Now, this would be, for me, a core position, a long-term position that I just want to hold on to. I think the markets have given us an opportunity to buy the shares on a pullback. And what I find really bullish about this setup here is that we pulled back. We broke down below the week of February the 5th. We broke down below the lower band of support. Yet we rallied back and we are now attempting to break out once again. Do you get aggressively long next week? No. You need to build a position much as you must do with any other position. It's all about the strategy. Now RSI, a higher low, a double bottom setup, and a breakout last week. Good stuff. Also, when you take a look at price, which I already pointed out, we have a breakdown below the lower band of support. Stokes never confirmed that. In fact, Stokes continued to put in higher lows. And last week, they validated the move higher on price. So I think that we are hooking up. We did bounce off the 50 level. That is very, very sexy stuff when you see support at the 50 level. Stoke RSI broke out last week after putting in a higher low. Volume was weak. However, the higher level view is you can go back to November of 17. Massive institutional accumulation. Members, more to come tomorrow on the week ahead commentary. Google, this is the C-class shares. Or should I say alphabet? It drives me crazy, that name. We are in a triangle formation. We're poised for a breakout above the upper band of resistance. We have a higher low set up on RSI and a breakout. We have higher lows on stochastics. Both lines are back above the 50 level. Good stuff. We have a double bottom setup on Ultimate Oscillator, and I believe that we have a breakout as well. And we do, slightly above the pivot point. So, Google looking strong. The next chart up, Shopify. We were long of this. We booked profits. I still like the shares. I said to watch them. We've traded sideways. Last week, we resumed the uptrend. Members, more to come here. I think that we are moving higher on Shopify. Volume last week was a bit light. We are consolidating on Ultimate Oscillator. We did put in a lower low last week on price, a bullish key reversal, meaning we traded down initially on the week. We reversed to close at the highs of the week. That is an attractive setup. So members, more to come tomorrow on the week ahead commentary. Kansas City Southern, a transport stock. The transportation sector did outstanding last week. KSU appeared on our screener looking rock solid. What did it do? We had a bullish key reversal last week. We have been in a tight consolidation for quite some time. We broke out above resistance last week at the 110 level. We have our stochastics hooking up. They're in a tight consolidation. We have a double bottom setup on RSI. It broke out last week. Volume was good, slightly above average. So KSU looking very interesting as a long. Members, more to come tomorrow on the week ahead commentary. Domino's Pizza, another one where we've been watching for a breakout for quite some time. And this is brought to my attention by a fellow member. I have a lot of smart members. You can engage with them in the forum if you want to bounce ideas around. Now, DPZ, we have been watching. It was weak earlier in the week. However, as a matter of fact, I think we spoke about it on stock charts today on Friday morning. Let me check that out, see if I can grab a clip. Yeah, and here we go. Here's what I had to say about DPZ on Friday morning. Domino's Pizza weekly chart. It's had a rough week, rough 2 weeks actually. I'm bullish on Domino's. I remain bullish. The trend is still up. We have a doji star formation thus far this week. We're holding support. Volume to the downside is relatively light. Daily chart. Yesterday, definitely a bearish day. We had a bearish key reversal, but we held support. No reason to go selling yet. Indicators, Stokes are beginning to hook back up again. So what does that mean? We're beginning to regain momentum. RSI was hooking up, then stalled yesterday. Volume yesterday very light. I still like the name. I wouldn't go buying it until we saw us close out the week above this support level. And I wouldn't want to buy the shares on a low below 221.91. I would rather wait to see whether or not we reverse off the lows of the day and close back above the support level. Then I'd be a buyer. Because what the market is telling me, if we do get a bullish key reversal and we close back above the support level today, that tells me that we have buyers below. We have reinforcements below. We may be contrarians, but we love to buy where there are other buyers because it increases the probability of us realizing a profitable trade. So that was from Friday morning. And while at the close on Thursday, we had a doji star formation on a weekly basis, which is a sign of indecision, by Friday afternoon, traders had made up their mind that they were taking DPZ higher. We do, in fact, have reinforcements below, so we know exactly where our stop loss is going to be. We're going to look to get long of DPZ fairly soon. Members, more to come tomorrow on Domino's Pizza. I mentioned at the beginning of this commentary that there are two charts, if you want to boil the market down right now, two charts that you need to watch. One, the 10-year yield. Two is the U.S. dollar. These are both weekly charts. Members, we're going to go into greater detail on these charts tomorrow. Where do I think that they're going? And what impact will they have on the markets? But folks, remember, it was only a couple of weeks ago. We were only a couple of bips higher on the 10-year yield, and the markets began to buckle. Now, while, yes, we had a fantastic jobs number that came out yesterday, there were two things missing. One, the average hourly work week did not expand. What does that mean? It means that that report could be a one-hit wonder because prior to putting on new employees, employers will offer overtime, thus expanding the average hourly work week. It's a forward-looking indicator. We did not get that. Lastly, wages did not grow. They missed expectations. Now, if you have a job market that is growing as fast as it appeared yesterday, which is great, the laws of supply and demand have not been suspended. So one would expect that if there is truly pressure in the job market, that you would see wages follow through. We're not getting it. So if we begin to see numbers like yesterday's job numbers continue moving forward, that's great stuff. As an American, I love it. That's great stuff. You always want to see good things for your country. But let's not hang our hat on one employment number. With regard to the 10-year yield, I have been of the opinion that we're going to see a three-handle. I mentioned a couple of weeks ago that we'd probably get a pullback. We got the pullback. I think it was the pause that refreshed. I think that traders are OCD. We're so close to a three-handle on the 10-year yield, they have to touch it. And I think that yields are going to press higher in all probability next week. The question then becomes, how does the market hold up? And members will be talking strategy on the week ahead commentary with regard to the dollar. If the dollar rolls over and continues its downtrend, it's going to open up a slew of stocks that are eligible to be bought aggressively in the commodity space. And we have some of them now. We're looking to add more. All we're looking for is a resolution as to the direction of the U.S. dollar. We're very close to a breakout on a weekly chart. That can't be denied. But the overall trend is down. Does that downtrend resume? We have a lot of economic data coming out next week. Members, we're going to talk about that tomorrow on the week ahead commentary. Folks, if you're not currently a member, Please sign up quickly. We only have a few spots open in silver and gold. The 14-day free trial offer is currently closed. Why do we close out membership? It's because I'm a boutique operation. I like to engage with members. I review charts for them, and there's only so much time in the day where I can truly engage with high-quality feedback our members. So that's the reason why we close out membership. Now, you can always sign up for the bronze level membership. That's where you get the week ahead commentary. It's a very low price point. Members, I'll be in the forum over the weekend. If you have any questions, drop me a note. And everybody have a great trading week, a profitable trading week, and a fantastic weekend. Be well.